morning, guys. What I'm doing right now is I'm just scanning for some healthcare stocks, just in case that I want to build up my portfolio and build a, I guess, pharmaceutical side of my portfolio right now. So I'm just scanning for some stocks. Give me some time and just taking a look at them right now as we speak. There's like a mosquito in this room, and I'm getting bits up. It's taking pretty long to search up one company. HUM, IQV. See here. Look at what the heck is that per share? Jeez. I'm almost finished. So almost finished with this analysis here. THC. Oh my goodness. Jeez, I am getting bit. Alright, that should be a good selection of stocks there for me to kind of take a look at. Alright. So let's begin today's live stream. Sorry about that. So the first thing I do want to start off with today is to take a look at the economic calendar here. And the first thing that caught my eye was the goods trade balance. And that's essentially comparing how much the United States has brought in and how much the United States has exported. So imports minus exports. Let's see. Yeah, and it looks like, I mean, we're still in the negative number, but it is better compared to the previous estimated. So, I mean, with the tariffs, we did see a decline in this difference here, in the trade difference, which is, which is good, but that just could be a general decline in both imports and exports, but we'll see. The other one is JOLTS job openings. So this is like the very first, it's a number of job openings during the reported month, excluding the farming industry. So it's going to be a good indicator of what's going on in the labor market. I believe tomorrow on Wednesday, we have FOMC, we have advanced GDP quarter over quarter, and we also have the first release of NFP, which is the ADP one. It's not as, I wouldn't say, it's not as impactful as the one that's going to be released on Friday, but it does give us a general outline of what is to be expected for the jobs release on, or I guess the labor market release on Friday. But yeah, we'll see here. Federal funds rate, I am assuming that, I'm going to speculate that we're going to keep the federal funds the same. We're probably not going to change it, right? With inflation data being released about a week ago, stating that there is a mild increase in inflation, I would doubt that the feds are going to lower interest rates, right? And we'll see. Donald Trump, he wants to lower the interest rates here, the federal funds rates, so that it could affect the short-term interest rates on debt, and so that he could pay off some of the debt, or I guess, what's that word? Roll over new debt with cheaper cost, or relatively cheaper cost, right, compared to what it is now. If Fed chairman and FOMC decide to lower interest rates. So yeah, that's to be expected for tomorrow. Today, like I said, only two things that really caught my eye. And I guess to begin today's technicals here, let's take a look at what's going on here on the daily. So this first thing I do want to draw your attention towards is this daily candle here from yesterday. And with the way that we closed here on this daily candle, not really, I would say that I don't necessarily have a bias, right? Due to the fact that we had a pretty indecisive closure on the daily time frame. And so my best bet coming into today would have been to not force anything to happen on the daily time frame. However, coming into the London session or coming into the Asian and London session, we did expand higher, taking out previous day high. And so because we took out previous day high, that really confirms to me that I shouldn't be using the daily time frame anymore and focus more on the intraday time frames. So here we can see that we have taken out previous day high, and my best approach coming into the morning now is, like I stated, not to utilize the weekly or daily time frame, but to utilize, the 4-hour candle and to utilize the 8-hour candle. Depending on how those two candles close in about 15 minutes will give me a morning objective, right? If we close bullish on the 4-hour time frame and the 8-hour time frame, then I will be targeting their highs. But if we close bearish, then I'll be targeting the low. All depends on how we close, right? And that's pretty much all for the analysis for the morning, at least. I don't want to overstate because, like I stated, the 4-hour candle hasn't closed yet, so anything could happen. So that's my approach. We did complete the weekly objective as well already. So coming into this week, I wanted to see us take out previous week's high due to the fact that the previous weekly candle closed bullish, right? A more objective way of saying this is, I'm gonna draw up some lines for you guys. And it's a pretty simple approach, I would say, right, to the way that I view things. But the easiest way for me to explain this is, or how I declare bias, is I look at whatever candle or whatever time frame it is, and I look on that candle, the previous candle, right? And I ask myself, is the candle's closure closer to the candle's high, or is it closer to the candle's low? And in this case, is the green line closer to the red line, or is it closer to the purple line? The easiest, not even the easiest, to objectively state and answer this question, it's the red line, right? You cannot, the green line is closer to the red line. And so because of the fact that the green line is closer to the red line, I can make the assumption that within the next whatever time frame that candle is, we should take out that red line, right? And this is on a weekly candle. So I can make that assumption that, okay, within the next weekly candle, we should at least take out the weekly high, which we did do coming into Sunday's open, right? We actually gapped up Sunday's opening price, and we like immediately took out previous week's high. So that's pretty interesting, right? That's something that you do want to note. And yeah, so let's take a look at the 15-minute time frame here and kind of see where we're at. With the 15-minute candle and what it's doing to, the 30-minute, hourly, 4-hour, well, we'll see. One thing that I do want to mention here is that at the moment, there is a SMT divergence between NQ and ES. So notice how here on ES, we have not taken out previous day high yet, right? Here on ES, you'll see that previous day high is still intact. And because of the fact that previous day high is still intact, that means that there is a SMT. So I can draw up this line here and state that, okay, yes, we have failed to take out previous day high, whereas on NQ, we have taken out previous day high. This is like the first sign of a possible reversal. If there's ever SMT between correlated assets, then you have to prepare for the idea that we could reverse, right? And so I wouldn't necessarily force the idea of bearish, prices just yet, but I am more open to lower prices due to the fact that we do have this SMT divergence, right? So here, there is that SMT divergence. And that SMT divergence is, like I stated before, is the first sign that we could have a possible reversal. It's not guaranteed. It's just more probable that we will most likely reverse. And I mean, we'll see here. Like I said, I don't want to, I don't want to declare something before the 4-hour candle and the 8-hour candle close. But if we do see a bearish closure here on the 4-hour candle and the 8-hour candle, which would lead me to target the 4-hour low and the 8-hour low, if we do get that, alongside the SMT, that's a lot more, I would say, favorable to the downside, right? I would prefer that a lot. That would be something that I would consider is favoring the downside delivery, sell side delivery. So we'll see here. In about 8 minutes or so, we'll close on the 4-hour candle and the 8-hour candle to confirm my kind of, I would say, speculation. So we'll see. Before then, I'm going to go into the pros and cons and briefly go over some of the pros and cons that I can carry from previous week onto this week. So the first thing that I want to cover is to continue to take consistent setups. Every single setup that I take is going to have a general outline, pretty much the same blueprint for every single setup, right? There are 3 things that I always look for before I even press the button, right? The first thing is going to be a higher time frame objective. The second is going to be a model, and the third is entry pattern. So those three components has to always be present before I even press the button, right? You know, requiring these three components is what actually forces me to be consistent. And yeah, I'll go over what the definitions of those components are later whenever I do a review over my execution from yesterday. But yeah, second, pay close attention to SMT. Like I stated before, the fact that there is an SMT with NQ and ES right now, it's more favorable for me that we should reverse. It's more probable that we could reverse, right? And the chances of us continuing, the chances of prices continuing in that specific direction decreases by a lot, right? The probability isn't going to be as high as it was if there was no SMT. But yeah, so SMT, I would say it's pretty important to know. The two takeaways are with SMT is that if there is a presence of SMT, then you have to understand that there is a possible reversal. It's not guaranteed. Nothing is guaranteed. It's just more probable that we could reverse. Lack of SMT is going to lead to a potential continuation. So notice the words that I'm using here. It's not guaranteed. It's always more probable. It could potentially happen. It's more possible, right? It's literally a game of odds. If you can get the chances higher for something to happen, then you'll take it, right? Nothing's guaranteed here. So, but understanding that SMT allows you to gain more chances is something that you do want to utilize, or you should utilize. Third, understanding my setup before I even take it, right? There are two kind of main setups that I take. It's going to be called the expansion model and an EQ model, equilibrium model. Today, I'll be going over the expansion model and kind of explaining my thought process before I even, press the button. The fourth is to utilize every single time frame to my advantage, right? The fact that I'm able to kind of, I wouldn't say bounce around, but pivot from, the daily, understanding that the daily's objective has been completed. So I have to pivot onto different time frames. I'm using the weekly, I'm using the 4 hour, I'm using the 8 hour. I'm combining all of these time frames together to kind of formulate a setup, right, to where I could potentially use. So that's the idea here. Yeah, so utilizing every single time frame. Time is fractal, meaning every single time frame will have its own objective, right? The hourly candle will have its own objective. The daily will have its own objective. Once an objective has been completed, you don't want to stick onto that same time frame. You want to, pivot lower and utilize, the other time frames as well. The last thing here is to be patient. Not really going into this week to force trades to happen. I I'm going to allow them to come to me. If the components are there, I'll take the setup. If it isn't, then I'll just sit on the sidelines. Nothing, it's very simple. That's something that whenever I first started, it was pretty much taught to me that, or like, I guess the things that I would do were pretty much equalizing into me forcing things to happen, right? I went into every single day as if I was forced to take setups, but that's not going to be possible, right? Sometimes there are times where your components aren't there. There are going to be times where the setup runs away from you, right? And you're just simply going to have to be a spectator, and that's completely fine. And that's pretty much going to be all for the pros and cons here. With the way that the 4-hour candle and the 8-hour candle are closing right now, I I don't necessarily have a bias. It's pretty indecisive, the 4-hour candle closure and the 8-hour candle closure. So I don't necessarily have a bias, right? And so I think my best approach is to not force things to happen and to sit on the sidelines, simply based off of the fact that we had a pretty indecisive 4-hour candle closure just now, and same thing here on the 8-hour time frame. That doesn't mean that I can't take anything for the next 4 hours in the next 8 hour. That just means that I have to pivot, right? I could possibly take a setup based off of the hourly time frame, or I could take a setup based off of the 15-minute time frame. It just depends on if the candle's objective to me is clear, concise, and if there's an opportunity for me to be a part of the move, right? Sometimes there are going to be times where I just have to be a spectator, where I have to sit on the sidelines and just kind of like watch what prices would do. And yeah, we'll see. We'll see here and watch how we close on, possibly the 50-minute, the 30-minute, or the hour. But for now, I'm not going to utilize the 4-hour time frame. I'm not going to utilize the 8-hour time frame. And so I think now it's a good time for me to go over the execution that I took here on yesterday. So before I break down this setup, I do want to mention that whenever I was taking this setup, I had about 10 seconds to analyze everything, right? I didn't even have enough time for me to consider how much contracts I should be taking and what the stop loss was going to be and stuff like that. So once I show you the numbers, I think you guys will understand. But let's start off with why I even took this setup in the first place. So the first thing that I always look for, right, is I'm doing top-down analysis, which means that I'm going to start on, I guess, relatively the higher time frame, and then I'm going to move incrementally one at a time onto a lower time frame, right? Whenever I say incrementally, I mean like I'm not going to go from the weekly time frame and straight onto the 1 minute time frame, as the weekly and the 1 minute, they're so far apart in time that you can't really I've always had difficulty kind of explaining this concept, but the time difference with the weekly and the 1 minute is too large for you to group them together almost. I'm sure there's a better way of explaining that, but that's like the whole idea is, you want to go from time frames that make sense, right? Like whenever you go, like for me at least, I went from the 1 hour onto the minute or onto the 15 minute for the specific setup. There would be occasions where I go from the weekly onto the daily, but there are never times where I would go from the monthly straight onto the 15 minute, right? The monthly and the 15 minute, the times, the time is so far apart where it just doesn't make any sense for it to be correlated. It's the best analogy for this example or for this like concept is like imagine reading a book. You're reading the book from page 1 and you're reading it all the way to page 50. You're skipping like 49 pages worth of information. That's basically the same idea of going from the weekly straight onto the 1 minute. It's not, there's no proportionality, if that's a word. It's not correlated. Time is time, but you have to understand that the time difference is something that you have to consider. So coming to this specific setup, my higher time frame objective, the bigger reason why I want to see lower prices here in this specific time is based off of the hourly candle closure, right? And so you'll see here on the right side of my screen where I kind of note that, hey, this hourly candle closure here, it's pretty bearish, right? Kind of refer back to whenever I stated that the candle's closure is closer to the low than it is to the candle's high. And so that my anticipation is that, okay, we should at least take out this hourly low, right? That's the low hanging fruit, is that we should at least take out the hourly low. So that kind of leaves me with a macro perspective on why I want to see lower prices, right? So I'm bearish. I'm going to be bearish for the next 1 hour. And the way that I frame myself, or the way that I align myself with this kind of bearish order flow, is going to be based off of the 15-minute and the 30-minute. So here is the 30-minute candle, and here is the 15-minute candle. Notice how this 30-minute candle and this 15-minute candle closed bearish. Same order flow here, such as the hourly time frame, right? The 15-minute, the 30-minute, both closed bearish. One thing that I do want to draw your attention to here is that notice how the 30-minute low is the exact same low as the 15-minute low. And so because the 15-minute low has the same low as the 30-minute, I can anticipate that we should complete the 30-minute objective. We should take out the 30-minute low within the next 15 minutes, right? That idea, that concept is called scoping. I don't think ICT has ever mentioned anything about this, scope theory, right? It's, it makes sense, right? Because if you understand that every single candle has an objective and there are two candles that have the same objective, right? In this case, the 30-minute and the 15-minute, then you would choose the lower time frame out of the two, and you want to make that assumption that, okay, because the 15-minute has the same low as the 30-minute, we shouldn't complete it within the next 30 minutes, but we should complete it within the next 15 minutes. Whenever I say complete, I mean we should take out this 15-minute low, right? And so that's the framework. This is the blueprint of my setup, right? That's the higher time frame objective, and that's the model. So I'm bearish. I'm bearish because of the hourly candle, and I'm bearish because of the 15-minute/30-minute candle. Another way that you can kind of view this is, imagine that there's a magnet right at where there's a magnet right at the hourly low, and there's another magnet at the 15-minute/30-minute low. The hourly magnet is going to be bigger than the 15-minute magnet, right? But they both they're going to be pulling you towards it, right? The 15-minute is going to be pulling prices lower, the same as the hourly low. It's gonna continue to pull you towards it. And so the way that I align myself with this order flow here is based off of this 1 minute fair value gap. So the way that I enter here is, once prices rebalances into this little gap right here, this 1 minute fair value gap, I'm going to anticipate that we bounce off of this fair value gap almost. We take out the 15-minute low. After we take out the 15-minute low, we should expand towards the hourly low. So that's kind of where the name expansion model comes from, right? We should expand lower. We should continue to expand lower after taking out the 15-minute low towards the hourly low. So that's everything, right? There's the higher time frame objective, there's the model, and there's the entry pattern. 3 components. There's some other things that I pay attention to whenever I am taking a setup is SMT. Is ES also suggesting lower prices? And if it is, that's a lot more that gives me more confidence. That's an extra confluence for why I should be seeing lower prices. And so you'll see here in the next slide that prices rebalances into this inefficiency. We respect the consequent encroachment. We take out the 15-minute low, and that's kind of where I took a partial here. I've moved my stops to break even. After we complete the 15-minute objective, we kind of get another touch back into the 1 minute fair value gap where I got stopped out. So I took partials here. After I took my partials at the 15-minute objective, I moved my stops to break even, or just a little bit past break even, and I got stopped out. But notice how we ended up completing the hourly objective as well. We took out the 15-minute low. We didn't stop there. We took it out and we continued lower. We continued to expand lower. Expansion model. So that's the setup. So back to the fact that I did take this in like 10 seconds. I'm not saying this to say that I was able to analyze it really quickly. I actually think this is something that I should improve on, right? I shouldn't be taking a setup simply based off of a 10-minute or a 10-second analysis, right? And this 10-second analysis made me like, I had to log into my account within like 2 seconds, and I had to get a framework. And you'll see here, you'll see why the risk to reward here is so skewed. It was still 1-to-1. The risk to reward was still 1-to-1, but notice my total risk in this setup was $28. Total reward was 28. Ticks, 28. The number of contracts was 2. This setup should have been 7 contracts, and it should have been a $100 risk and a little bit over $100 reward. And so the fact that I only had 10 seconds kind of led me to this outcome here. Net profit with fees, and because I took partials right and moved my stops to break even and getting stopped out at break even, my net profit here was $15, which sets my account to be where it is right now. Slowly progressing, but this is something that I do want to work on, right? I don't want to be, analyzing a setup within 15 seconds and just rushing into a trade and having my risk to reward like messed up here. But that's just, it happens. And so that's going to be, the review of the execution from yesterday. Hopefully that helped you guys out with understanding what a higher time frame objective is, what a model, and what a entry pattern is, right? And back to the live charts here, you'll notice that we did take out the 4-hour low. And so now it really confirms to me that, okay, I shouldn't be using the 4-hour time frame anymore. After we completed its objective, or I guess after we took out the 4-hour low, there really isn't any reason for me to continue to utilize this time frame. And so I think my best bet coming into the rest of the morning session and coming into the afternoon session is to utilize, the hourly time frame, the 15-minute time frame. Look for even lower intraday models. And that's going to wrap it up for today's live stream. Hopefully that was insightful. And so, actually, I'm not going to be live here on Wednesday, Thursday, and Friday. I'm going to be away from town. So, just wanted to mention that. And thank you guys so much for tuning in.